Hello everyone, welcome back again to yet another video on basics of technical analysis. This is the second episode and we are going to cover about the basics of candlesticks. I'll give the playlist link in description. Please do watch the first video, and there is going to be a series of videos on basics of technical analysis. I'll upload the videos on every Saturday, so please do watch that and make sure you are subscribing to the channel. And also there is a Telegram channel where we are giving instant news updates, and if there is any breakout we are updating there, and we are also giving intraday stocks on daily basis. So please do make sure that you are joining our Telegram channel too. So as I said earlier, in this video we are going to cover about why we are going to use candlesticks, and how candlesticks got evolved, and how it is working, and what they are indicating in the market. So in the last video I have concluded that we have selected technical analysis over fundamental analysis for a particular reason, and for technical analysis candlesticks form the base. Why candlesticks is because there are different types of chart available. This is a bar chart, and this is called as area chart, and this is called as line chart. This line chart and area chart are based on the close, that is, this is Sensex chart in a daily time frame, so they are going to plot the daily close of Sensex and they are going to join them with a line. This bar chart gives us more details, like we'll show it in a zoom way. See here, this particular candle is going to give us a high point, low point, open and close. So this is the high point here, this is the open, this is the close point, and this is going to be the low. But in candlesticks, if you see the same thing, we are getting it in a better view. This is the high point, this is the open point, this is the close point, and here is the low. So for our convenience we are selecting candlesticks over bars. There are not a much difference between candles and bar chart, but when we are going deep into the technical analysis and we want to draw trend lines, etc., candlesticks gives us a good chance. So now the history of candlesticks. Candlesticks was first developed in 18th century by a rice trader who is a Japanese, and his name was Munhesa Honma. He just made these candlesticks just to track the increase in the price of rice. In those days the price of rice were fluctuating like anything, and then morning one rate will be there, evening one rate will be there, or the rate may change daily, the rate may change weekly. And to keep all the track of this, he developed this method. And to modern day trading, it was first introduced by a book writer named Steve Nissen. He wrote a book called Japanese Candlestick Charting Techniques, and that was published on 2001. How a candlestick works. See, as you can see, there are only two types of candles. One is a green candle and other is a red. But people also use different colors for their convenience. They are going to use black and white, blue and red. So let us consider green and red. And as you can see, for a green candle, the open should be in the lower part and the close should be in the upper part. It has opened here and it has raised above and it has closed here. So this is called the high point and this is called the low point. This is because it can be opened here and then it has touched this low, and then it can move to this high. It has touched the high and then it came down here and it has been closed. So this is how green candle works. The open should be in the low and the close should be in the high. And same for the red candle, but in the opposite direction. The open should be in the upper part and the close should be in the below part. So if the close is below the opening point, it is going to form a red candle. Same as green candle, this is going to be the low point and this is going to be the high point. The candle may have opened here, it has traveled up to this high point and then it came down to this low but closed here. So this is how candlesticks works, and this particular region is called as the body of the candle, and these small stick like shaped are called as shadows or wicks. I'll explain you with an example. Let us consider there is going to be a open in 100, close in 90. The high is going to be about 105 and the low is going to be about 85. So as you can see, the open is greater than the close, so it is going to form a red candle. Let us consider this is the 100. So it has made a high point of 105. This is 105, and it has made a low point of 85, but it has closed around 90. So we have to close the candle, and this is the formation of red. Now let's see an example for green candle. Let us see, the open is going to be 100 again, the close is going to be 110, the high point is going to be 115, and the low point is going to be 95. So as you can see, open is less than the close, so it is going to form a green candle. And let us consider that it is opening here around 100, and it has made a low of about 95, and it has made a high of about 115, and it has closed around 110. So this is how green candle forms. I'm not saying it is going to open at 100, it's going to come down and it is reaching there and it is coming down. This is one scenario, but it may have opened at 100 and then it straightly went up to 115, then it came down to 95, but again raised up to 110. This can also happen. So you have to check how the candle has moved in lower time frames. I will come up with time frames in the next video. So this is how we have to normally consider candles, and the first candle is a normal candle, just I have given as an example. If these kind of candles are formed, this is a bullish candle. This is a bullish candle where buyers are stronger, but still there are some sellers here, and again the buyers have boosted up here. Same for the red candle, the sellers are in control, but the buyers have been come up and the sellers have moved down. So these second candles are the strongest. Here it has opened up here and made a low here, but this low has been completely drawn and then it closed around here. So this is the strongest of the candle. Same with the red candle, it has opened here, it has made a high of here, and then it drastically fall down and it closed around here. So the sellers are in total control. So this is the weakest candle because it has opened up here, it has made a high of about here, and then it came down. So the buyers have started and they have moved up, but still the sellers came in and they have finished strongly. So for the weakest of red candle, the opening was here, the sellers have made a good low, but still the buyers have come up and they closed here. So this is one of the weakest bearish candles. There can be neutral candles like this where the opening and close may be very near to each other, which means it has moved up a bit, it has moved down a bit, but still there is a confusion between buyers and sellers who are stronger. So they have finished up in neutral zone. As you can see, this is a neutral zone, this is a neutral zone, and there are chances of single candlestick reversal, which I am coming up in the next video. But still, as you can see, they have opened up here, it has fallen drastically, but then it moved up and it crosses the opening zone and then it finished very strongly. So we can consider there is going to be a reversal. Same here in red candle, they have opened here, they have moved up hugely, but then again after the sellers came, they have fallen drastically and closed here where sellers are in total control. So this is also one of the bearish reversal chance. So that's it for this video, guys. In the next video we can cover 3 important candlestick patterns and time frames. Please make sure you are liking this video and sharing it with your friends. Please subscribe the channel and also our Telegram channel. Thank you.